Hi, and welcome to Market Conversations. Just want to do a quick video on Alibaba. This is the Hong Kong market, and it is currently down 4%. We just got the news that Didi is going to get delisted from the US, and they're going to list on the Hong Kong exchange. This is perceived as negative news. So tomorrow we're going to see a huge downside on a lot of Chinese stocks. About is Alibaba, because I do have a position in the stock along with Didi, but that's a very small position compared to this. And I do believe that we're just going to see a lot of volatility, a lot of downside with Alibaba. And until everything resolves, we might see 100 or lower. I don't want to see it, but it might come. And so what we want to do is prepare ourselves, because I never thought I would see Alibaba below 120. Well, we saw that today. And a lot of people thought that 200 was the bottom, 180, 150, 140. And now we are trading around 120. Tomorrow, we're definitely going to gap down below 120 since the Hong Kong market is down. What we need to really do is hedge our positions. If you have a huge position, if you don't, it's fine. You can continue to hold on to your shares. But if you are someone like me who have a decent amount of shares and call options, we want to be able to hedge it so that way we can benefit on the downside. So what I was thinking was going to either January, February, March. I was thinking March. And these calls are pretty cheap. The 70, the 75. Not saying that it can go to 70, but we want to prepare ourselves for the worst. Because look how much Baba has dropped this year alone. It was at 274. This was just in February. And now it went to a low of 119. And then we take a look back here. Back in October of 2020, it was trading around 300. This is a very ugly chart, and it's on a downtrend right now. So until there is a reversal, be careful with buying short-term call options. So that's what I'm going to do, is just buy some puts. So the 100 strike price are very costly. So what I was planning to do is buy put debit spread. So what we wanted to do is buy the 100 and then sell the 90. We're looking at $200, and we can potentially make a profit of $790. So I was just gonna buy 5 of these, spend $1,000, and potentially make a profit of $4,000 if the stock closes below 90 in March. I don't know what's going to happen from here until March, here until sometime next year. We just don't know. But right now, there's just too much negative sentiment around Chinese companies. I've been talking about hedging for a while, and I haven't done it myself. And these calls here, the 100 strike calls that I mentioned in the past, it was around $2. Now they're $3.70. And they're probably going to be more tomorrow. So the longer we wait, the more expensive these puts are going to be. So we want to take action now. That's what I'm going to do tomorrow, because with Didi's news, there's just going to be a lot more downside. And until we see a reversal, we want to prepare ourselves. So that's pretty much it, guys. Let me know in the comments down below. Are you hedging your portfolio? Did you sell your shares? Are you completely done with Alibaba?